How's everyone doing today or this evening? If anyone's out there, can you just let me know how the audio is coming in for you? Appreciate it. Tim McKay, how you doing, buddy? RR audio loud and clear. Okay, appreciate that. Appreciate the feedback. WB sounds good. Thank you. WB, first time I've seen your name. Welcome aboard. Tim McKay also, I don't think I've seen your name. Welcome aboard. News Junkie 3000, how you doing? Okay, so I guess we'll go ahead and start the program. Welcome again to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and no, the bass is not turned up. I'm just kind of getting over or getting into a bit of a cold. I don't know which way it's going yet. So, yeah, if I sound a bit bassy, it's not anything to do with the bass controls. But hey, I do hope you folks all had a great New Year. Um, we're heading into 2020, and already things are starting to get pretty darn interesting. I think we'd all agree on that. So again, if you are new to this channel, please do go ahead and subscribe and click on the bell to be notified on updates and give us a thumbs up if you like what we do. We really do appreciate your support, and you can always find us on social media on various platforms. Our website is silverbullion.com.sg. Once again, .sg because we are located in Singapore. Facebook, Silver Bullion SG, Twitter, Silver Bullion PL. Let's see, Bitly, just the audio versions anyway, SBTV iTunes and SBTV Spotify, bit.ly/ SBTV iTunes, SBTV Spotify, that is. And we do have a crisis tracker group over on Telegram where we do put together some various news items throughout the day that can be pretty interesting. And I think we're even going to take a look at a couple of them today. So those are the ways that you can find or even follow us. So again, we do appreciate you being here, whether it's at night for you while getting ready for bed, having dinner, or whether you're in Asia and just starting your day. We thank you again for being here. So let's check who's on board. Full name, how you doing? Morning, Paul Nagel. All good, great. Silver Patriot, how you doing, buddy? Rob Clark, Happy New Year. Happy New Year to you too. Thank you. Truth Teller. Okay, that's a good name. We're always going to hold you up to that, right? You always got to tell the truth there. RR, lots going on. Yeah, definitely. That was one of the issues when I was looking at news items. Things just moved so fast towards the end of the week and over the weekend. Trying to find some proper news items for you guys was kind of difficult to do. You find one and then there's something else that trumps it, and there's something else that trumps it, and it was pretty difficult. But we went ahead and found some things anyway. Ride the curve. Metals are already on the move up. I'm going to assume they are. I haven't checked yet, but I certainly will. So, yeah, happy New Year, everyone. We're glad you're here. And in fact, let's just go ahead and do that. Let's take a look at the gold and silver price. We'll head on over to our website, silverbullion.com.sg, where we have a New Year sale. I might have to buy something. Okay, in USD. Oh yeah, silver definitely up. 1852 an ounce. Gold 1579 per ounce. Of both metals are definitely moving. Nickel, cobalt, the two electric vehicle metals, they're still kind of struggling a bit despite the demand, and despite Indonesia who's going to start removing some nickel supply from the market this year by not exporting nickel. So we're going to have to take a look at that. But mainly, we're here for gold and silver, and both are doing very well today. Let's take a look at the ratio. So we see the ratio, it's actually going a little up. We're at 85.8. Typically, this is what happens. Gold will move out ahead of silver, and then usually silver will catch up and close that ratio down a bit. So nothing to really be overly concerned about. That's just normally the way it works. So good to see that the metals are moving, but not good to see what's been going on lately. And I know that's probably on a lot of your minds with what's going on in the Middle East. It's it's incredible, and I don't mean that in a positive way. It's just that things never really seem to be solved, and everyone has a different opinion, and it's opinions can be just as volatile as the region itself, and it is something I do admit I do try to stay away from. But if you need to say your piece, go ahead and say your piece. I'm sure you'll find someone to go ahead and debate it with you. uh, Jeff 702, hello. Daryl, how you doing? Another fine day. Yes, indeed. Chris C. Gold. Yes, indeed. Pat. Happy, wealthy year 2020. Let's hope so. Let's hope so in more ways than one. Gold jumped $27 on opening. It, yeah, it had, just from looking at that, it definitely had a good spike this morning. Devin Maverick, happy, prosperous New Year. Thank you. You as well. Your family as well. Reached 1588. Annette Walls, hello from Middle Tennessee. How you doing, ma'am? Glad you could be here. First time I've seen you here. Welcome aboard. Silver Goyim, more war for greater is like I said. It just depends how you see things. There's a lot of different opinions on that. So I tend to stay away from it. But if you guys want to go ahead and chat about it, that you're entirely free to do so. Um, Got to take a look at that Fed balance sheet, though. Let's see where they're at. I'm sure they're still climbing, and before this is said and done, it's going to look like a check mark. I'm pretty certain about that. So we do have that V, which is still tailing upwards. I expect it's going to look like a check mark, probably February, March. We're not that far away. Before they started tapering, we were at about 4.4 trillion. We're at about 4.1 trillion right now, so we're not that far away from where the Fed was before all of these things happened in the repo market, where banks needed liquidity, and of course the Fed started growing their balance sheet. And we will also go ahead and take a look at the repo market really quick, so we can see it's still very, very active. This is a reverse repo where the Fed threw in 4.251 in treasuries. Repo market still needs liquidity. 31 billion, 18 billion. The one I'm always interested in is the mortgage backed. That one, it always seems to be moving on up. Sometimes it's even bigger than the treasury as securities. So here we go again. Let's see. Repo market, 15 billion. Treasuries, billion agency, 12 in mortgage backed. The interesting one, though, that I want to get to is what happened towards the end of the year, which is here. A reverse repo, where this is the Fed throwing back treasuries into the market. Actually, it may be a bit more than that, but just for simplistic terms, 64 billion. And this was something pretty unique because we've never seen them go that high before. As an example, if you were to chart it, typically they were the highest they were in the low 30 billion range, but all of a sudden, for some reason, they went all the way up 60 plus billion. So there's more to be told with that one. Um, there's more to be seen. That's for sure. And sorry about that. So one of the news items that I want to go into seems that gold has been taking up all the headlines lately, where the gold price marks its highest finish in more than 8 weeks. This is coming from Market Watch. Gold futures settled above 1,500 an ounce Thursday, making a third session of gains in a row and the highest finish for the precious metal since the end of October. Bullish gold investors say bullion has benefited in recent trade on doubts a China trade deal being completed, concerns about the implications of President Donald Trump's recent impeachment by the House, and worries about stock market valuations being stretched, at least in the U.S. Gold and silver are rising on apprehensions over U.S. China trade deal. and Trump and his impeachment proceedings, physical gold demand is still lagging gold investment demand. That's pretty interesting. The market still seems to be in paper. Let me go down a bit here. President Trump said that a trade deal with China was ready for signing in January, and Chinese officials have confirmed that the two sides are in close contact on a partial trade agreement. If I could just interject here, they so called had this, I think it's like a phase one, phase two, whatever type of a deal. I think if they just go in it by bits and pieces, it kind of sort of gives both sides room to maneuver. Meaning, we saw what happened in the end of the year with President Trump, where he would say a trade deal is near, and the market would react, and then when people found out, okay, maybe it's not so near, the market would react. But President Trump found a way to kind of sort of press a button and have the market react the way he wanted it to react. So as long as it's not a full and complete trade deal, I think this is what we're gonna go ahead and see continuing to happen in 2020. But back to the article, gold has been viewed as a good way to hedge the possibility of a further breakdown in the back and forth talks between China and the U.S. or a disappointment about the details of any pact. Well, that's kind of what we just talked about here. Both American and Chinese officials are saying that a trade deal will be signed soon. Gold and silver will crash only when trade deal is signed and details are released. I'm not so sure that's going to happen. Meanwhile, Senate Majority Leader Mitch McConnell remains at an impasse with Democrats over the next phase of Trump's impeachment progress, which markets have ignored, but which could inject a measure of uncertainty into markets at some point. High political uncertainty, and I think we can end the market there because it definitely does have high political uncertainty, and that's what's really driving, or part of what's driving the market right now. So taking a look at some of the comments here. Polynesian Pip, aloha, how you doing? Scott Osborne, good comment. Jeff, let me see what I can, if I can find that comment Jeff did. Dollar to silver ratio on USD. Yeah, that it's well over 1,000. I I remember seeing it, five, six, 700, 900 at times, but over 1,000 now. So need to keep an eye on that for sure. Jeff, good catch, Jeff 702. Let's see, Paul Nagel. They are preparing for war. Well, it's something you got to be real about. You have to be real about it, and it's something you got to understand. It's going on. There is preparation going on. Can't sugarcoat things. This is where we're at right now. Uh, map of map of Tashi just chilling here. Good. Okay, let's see. What else is there? China, Russia, and Iran doing military exercise together. Full name. I think they started about a week ago or so, a week or 2 weeks ago, or at least it was in the news that they were going to be doing some type of drills together. And gotta admit, in the back of my mind, I think in a lot of people's minds, there was the thought that something may happen during that time, since a lot of the assets are going to be military assets are going to be in that region. So there was a thought that did cross a lot of people's minds, and sure enough, something went down. So we'll have to again see how this unfolds. Let's just hope things can settle down a bit, and cooler heads prevail, and hopefully people will do the right thing. Let's see. RR, Trump plays the market. Gotta say, towards the end of the year, I'd have to agree. He knew how to move that market around, and which is why I was saying, in this year, I think they're going to start to bring up the word phase two of the deal or phase three of the deal, and that gives them the buffer that they'll need to kind of move the markets up and down again, the same way he did at the end of last year. So it's going to be pretty interesting to see how he goes about it. Uh, Rolf Steiner, I'll take gold over USD any day of the week. I'm with you, my man. I'm right behind you. Map of Happy New Year as well. Fanny pack. Okay, there we go. Yes, Happy New Year. I've actually met Rolf. He came down to the shop one day, and nice guy, nice guy. He's got the rest of his life well planned out. So I'm not gonna tell everyone his secret, but he's definitely got a good life ahead of him. Let's see, Christy, Fernando, Happy New Year. Hope you had I had a pretty good holiday season. New Year's going good, and I hope you had a great holiday season as well with you and your family. Okay, so let's take a look at another article where this was pretty interesting because we knew the banks were buying up a lot of gold last year, right? So Yahoo Finance kind of put it together for us, and what they came out with was something that Goldman actually said, where central banks are gobbling up 20% of the global gold supply, and that is quite a bit. 20% of the global gold supply, amazing. Article goes on to say, I guess it was originally from Bloomberg, that central banks are consuming a fifth of the global supply of gold, signaling a shift away from the dollar that's bolstering the case of or for owning bullion, according to Goldman Sachs. De-dollarization in central banks, demand from central banks for gold is the biggest since the Nixon era, eating up 20% of the global supply. Jeff Curry, the head of global commodities research at Goldman, said in an interview that he had last week, he's going to like gold better than bonds because the bonds won't reflect that de-dollarization. Okay, well, let's see how that goes out. Last, let's see, last week, anyway, Goldman analysts, including Sabine Shell, said investors should diversify their long term bond holdings with gold, citing fear driven demand for the precious metals. And as such, bullion climbed to a 6 year high in September as the Federal Reserve cut borrowing costs, and the total pile of debt yielding less than zero climbed to a record 17 trillion, boosting the appeal of non-interest bearing gold. And I think all of this, we're seeing that hedge funds and other large speculators boosted their bullish bets on the precious metals by almost 9% at the end of or the first week in December. Sorry, in the week ended December 3, and government data had also showed that as well. This is the biggest gain since late September. Moving on, gold cannot fully replace government bonds in a portfolio, but the case to reallocate a portion of normal bond exposure to gold is as strong as ever. Goldman said in a note, we still see upside in gold as late cycle concerns and heightened political uncertainty will likely support investment demand for bullion as a defensive asset. Okay, so those are some pretty interesting words coming out from Goldman Sachs, and I think we even had Judy Shelton. She came out, I think it was about mid last year, where she was talking about some type of a gold backed bond or of sorts. So it seems to be getting a little bit more attention there. Quick look at the comments again. Say that three. I was thinking the same thing. I was gonna say that's a bit of a title there. Um, okay, if you can't beat them, join them. Carl, absolutely, my man. If the bankers are getting gold, I'm gonna get gold, and we all should get gold. It's just something you have to do what they do. Don't necessarily do what they say, but do what they do. Yep, not bad for a barbarous relic. Autocorrect is yeah, I get that all the time. But going back to what Map of Tassi was saying, he was referring to the title, global gold supply, and trying to say that 3 5 times quick. That's a pretty rough one to do for sure. Um, so those are a couple articles that I was looking at, as well as this one here, where we're seeing that gold nears 6 year highs as Mideast tensions spur haven demand. Okay, so we are again seeing gold going up. We just took a look at the price, and it's starting to reflect it. Gold neared a 6 year high after a U.S. airstrike killed one of Iran's most powerful generals, ratcheting up tensions in the Middle East and driving demand for havens. Bullion raised as much as 1.6% up to 15.53 an ounce in the spot market, reaching the highest since September. And platinum futures briefly topped 1,000 an ounce to touch the highest since early of 2018. Silver also rose as well. The strike in Baghdad, ordered by President Trump, killed Soleimani, the Iranian general who led the Revolutionary Guard's Quds Force. Iran's supreme leader vowed severe retaliation. The U.S. now plans to add almost 3,000 troops to the 700 already dispatched to Kuwait. So, yeah, it looks like at least for the first part of 2020, we're gonna have to be uh, pretty much on our toes and aware of what's going on in the Middle East. And I think we are going to have to really dig for truth, because depending on which media outlets you follow, you're hearing everything. There's not one consistent line across all news channels, and that's, for me anyway, that's pretty darn disappointing. Shows how fragmented things are. So we'll have to see how this is going to play out. Follow the yellow brick road, absolutely. Oscar Flores, in God Money We Trust. Yeah, yeah, we should have stayed on it. Do we know how much gold the Fed holds on its balance sheet? You know, I've heard there was a video from years ago where some guy from the New York Fed said we don't hold any gold. This was years and years ago where he said we don't hold any gold. So I don't think we're ever going to get the truth. Supposedly we have 8,000 plus tons. This guy from the New York Fed says we don't hold any. But again, this is decades ago. So I don't think we will never get the truth. Let's see. Daryl Rowan Marples, gold-backed coins make sense. Yeah, I'm a fan of having some type of a backing, even some type of a commodity backing. Commodities are real, and so you need to have something that's real, something that has some value in order to back your currency. So for me, I'm really looking at those things. Um, so anyway, we're seeing all of this news coming into 2020, and I just wanted to backpedal a little bit and take a look at what a few people had to say as far as the predictions for 2020, and it's going to start off with the markets.
There's no denying the American economy is in better shape at the end of this decade than the last. As of December 2019, it expanded for a record 126 straight months, while the unemployment rate was near its lowest level in 50 years. Even though the last 10 years brought the longest expansion ever in the U.S., it hasn't exactly been an economic boom by historical standards. Many Americans still feel left behind, and this decade has been marked as much by the growing economy as increasing inequality.
There are pockets of the country and important groups of individuals, communities, families, households who still are not enjoying anything that they would describe as economic prosperity.
GDP growth during this recovery has been slower than in previous economic expansions. Some investors point to mini recessions over the past 10 years, where GDP growth has just barely exceeded 0%.
We've had a number of mini cycles within this expansion, but generally speaking, if you look at GDP over the last 10 years, it has really, and it looks just amazing, been 2% for a very, very long time, so it has been relatively flat.
The memory of the financial crisis has made consumers and businesses more cautious about spending money and more attuned to the next recession. Unlike in previous decades, the internet has given consumers access to the latest news and economic indicators, potentially making them hyper-aware of any changes in the economy.
I think because there was so many things that we all missed in the financial crisis, both before and when it was going on in terms of the speed of the slowdown, I do think that both the press and consumers and the Federal Reserve and us in financial markets are basically much more alert to what's going on.
That caution has meant there aren't imbalances in the financial system, which has helped the recovery go on for longer.
Typically, expansions end because they overheat. What I mean by that is the economy is rip-roaring, booming. You see a lot of construction, overbuilding, you see a lot of borrowing, high leverage, you see a lot of speculation in markets. But in this expansion, we never really got going. We don't have that overbuilding problem. We don't have over leverage in general.
But some of the steps policymakers took during the crisis have only made inequality worse.
The one glaring blemish is the gap between the haves and the have-nots.
Look no further than the stock market. U.S. markets are near record highs, but many Americans have missed out on the bull run. By one estimate, the wealthiest 10% of Americans own more than 80% of the stock market's wealth.
As the stock market rises, that disbenefits that, the top 20% and really the top 10% and really the top 1% and really the top 1/10 of 1%. So the wealth distribution has gotten much more skewed. The other thing that's happened is home ownership rates have declined, right? So home ownership was key to the wealth of middle income Americans. That obviously got creamed in the financial crisis and the housing bust. And so home ownership rate today is meaningfully lower than it was when it peaked 10, 15 years ago. And that means that middle income Americans just haven't been able to build wealth.
Okay, so we've had the longest expansion in history, I believe, and we just haven't been able to build wealth. Most of America, probably the world, perhaps, has not been able to build that wealth. And typically, when recessions come, it's because something heated up and then it had to cool off a bit. Uh, we're not seeing that. We are not seeing that unless you want to count the everything bubbles that are all over the place. Then I guess you could count that. I want to take a look at some of your comments. Let's see. Um, sorry about that. Bobby Jones, billions of gold in the Grand Canyon. Big Swear said, "Yeah, we've been trying to get Bix on for a while. So far, no luck. No luck. I know it's what he believes. He believes there is a lot of gold in the Grand Canyon. Um, I didn't see any when I was there, but then again, I didn't really look for any. But it's an interesting theory that Biggs has. Paul Hunt reports of gold and silver sold out in Germany. Bullion shops like the Gusa closed there. Has the physical run begun? Limits reduced on cash buying to 2,000 euro, but with bullion shops closed, can't even buy. My understanding was I think there was going to be some kind of a regulation or law or something that Germany was about to set where you could only buy up to $2,000 in cash, and anything above 2,000, I believe you were going to have some type of a report filed on you that will be kept on file, I suppose. And so I think a lot of people don't like that, so they decided to go ahead and buy gold and silver before this regulation or law actually went into effect. That's my understanding of it. I could be wrong. Feel free to correct me if I am wrong. Um, let's see. Chief economist of Deutsche Bank. He's someone we can trust. Yeah, yeah, he is right. Wink, right? Wink, wink. There you go. Deutsche Bank equals bunch of crooks. They've been in trouble for a while, and there is that theory or that speculation floating around that part of this whole repo deal is to shovel some money over to Deutsche Bank and help keep that zombie bank up, kind of like that weekend at Bernie's thing that we talked about a few weeks ago, where it may be dead. It may be a zombie bank already, and they're just trying to keep it up, make it look like it's still alive. But again, purely speculation. The truth is, we just don't know. Even if I'm here saying something, it's speculation. Also, so I much prefer to give you guys just facts, but and leave the rest up to you guys to decide. And I will throw in my own thoughts as well from time to time. Um, so I mean that's just it. According to this last clip that we saw, we are doing better. The U.S. is doing better this decade than they were doing last decade. Last decade, of course, the Great Recession. But the thing is, the numbers are showing us something. But when we look around, we don't see it. You don't see it with your own eyes. But the numbers are trying to tell you a story that you can take to the bank, that you can believe, but what your eyes are seeing is something completely different. So I think as one of the gentlemen said in this clip, this time around it is very very different. So we'll wait and see. And so again, so we're going into 2020, and we just want to take a look at what some of the people are saying. And again, we'll start with the market outlook.
2019 exceeded almost everybody's expectations to the upside. So what does that mean as we tip into 2020, I guess, tactically and then longer term?
Well, I guess I'm concerned about a possible melt-up here. My target for the end of this year had been 3,100 all year, and we've surpassed that, and I've been shooting for 3,500 for the S&P 500 by the end of next year, and we're getting closer faster than I would have expected. It's a bull market. Bull markets do best when you've got a wall of worries. And what I'm worrying about is nobody's worried anymore.
Ballpark, do you have a sense of what the magnitude of any type of pullback we might get once we, kind of have this rally run its course?
Well, we've been keeping track, almost a diary of panic attacks in this bull market since it started. And we're up to number 65. They're not all full-fledged corrections. About 5 of them are corrections of 10 to 20%. But 10 to 20% would be quite possible if this market gets to 3,500 well ahead of my schedule.
Okay, market melt-up. What do you guys think? You think we are in the process of some sort of a market melt-up? Could be. It's pretty interesting that he came out and said that. So this guy thinks, the markets are overheating a bit. His concern is a market melt-up. And we're going to take a look at a couple other different opinions as to this market melt-up.
It can't be that you just go and buy the entire market. Nothing can go up forever like that. What exactly would be the place that is the riskiest in this marketplace right now? We want to stay away from it. The valuations are just maybe a little too stretched at this stage.
Over this 10-plus year bull market, the leading sectors have been technology, consumer discretionary, financials, and industrials. And we believe this bull market is still intact, and we expect that same leadership this year. The sluggish ones have been the so-called defensive recession-proof sectors, and we'd have those underweighted.
All right, Kenny, last word to you here. What's the one thing you're worried about the most in 2020?
I think besides trading, I'm not so worried about trading, but I'm really worried about the first quarter of the year in terms of what the president's election is going to bring. Are we going to really get a far left candidate by Super Tuesday in March? And what does that then mean for the market? I mean, think about what happens if Bernie or Lizzie come to the top of that trade. You're going to worry about financials, technology, pharmaceuticals, healthcare. If it's more moderate center, then I think the market's fine. But I think the election over the first quarter is what's going to drive kind of the angst and the anxiety.
Okay, so this gentleman is looking at the elections, but both guys seem to think the markets are just fine. They don't really see necessarily too much of a problem in these markets, and one guy doesn't see any concern. The other guy, his concern is more or less the elections. But I mean, in fairness, I think that is a huge concern for not just people in the U.S. but anywhere in the world. I mean, what happens with the U.S. generally, it does trickle down into other parts of the world. So I think, it's something we need to keep an eye on. And it's reasons like this why the rest of the world does kind of get tired, why they want to de-dollarize. They don't want to be so intertwined with U.S. politics, with U.S. The dollar being the reserve currency. And it's understandable. It's understandable. And I'd have to agree, if you are in another part of the world, yeah, why do you have to be so tied in with the U.S. where it affects you in every which way? So I do see their point. From the U.S. perspective, you see it as, you're involved in so many different parts of the world trying to, some cases, take care of things. In some cases, maybe not so much. But, it's just two very, very different sides, different opinions. And, it's something I think what I appreciate is when people, they can actually see two sides and not get so emotionally invested in one side or the other. I think we kind of have a bit of too much of that going on. Your comments. IBJI, gold has to break out of technical resistance, also has to resist its all-time, or retest, its all-time high. Silver hasn't confirmed the latest move. Silver needs to break $20 an ounce. You know what? I somewhat agree. More than half agree with what you're saying. I think the one thing people don't realize is gold's all-time high was in the 1900 US dollar anyway, a level. And we're actually not too far away from that now. And I think, it's slowly sneaking up on people where we didn't realize it's not too far away. I mean, it the way gold moves, 20, 50, 80 bucks a day, you're not that far. You're not that far away from it. So something to definitely keep an eye on. And again, if you are new to precious metals, price is not everything. It's also the insurance aspect where it acts as a safe haven. It acts as a store of value. I think these are probably more of the reasons why people tend to buy gold and silver. Great comments, guys. Um, Rolf Steiner, market melt up, get out end of April and get to whatever safety you can then. Okay. If you don't mind, why April? I'm just curious about why April. Maybe you could share with us what you're looking at in April. Zombie Head, like that name. You guys are cool, man. Iran hackers already claiming credit for a cyber attack on one of our federal websites with warning that this is only the beginning. Could this be used for the excuse to reset our currency? You know what, Zombie Head? That's a good point. You just don't know where it's going to come from. And again, we've had guests on the show, mainly Danielle DiMartino Booth, who has said for national security reasons, we are going to have some type of Fed crypto coin. And I think she's right. The more and more things unfold, how they unfold, the more you're seeing that we are definitely all of us are definitely open to really being hurt financially the way the system is today. And all we can do is try and push for a better system. Don't settle for what they give you. You make them settle for what you want, and that's really the whole deal. They politicians work for you. You don't bow down to them. They bow down to your will, your vote. They work for you. Don't ever forget that. And somehow we seem to have forgotten that where we are right now. Um, Tim McKay, stocks rising because of Fed support and stock buybacks. Real economy is in decline. I'd agree with you there, for sure. Well said. Physical gold is a necessity. Daryl, absolutely. You need to have it. You can't just look at. I mean, granted, paper markets are doing well, equities, things like that, absolutely doing well. But you always gotta understand it's going to reverse, or it's going to come to an end of sorts, or take a U-turn, whatever it is. And you need to make sure that you have some type of vehicle that's going to store the wealth you accumulated. And speaking on that, 2020, I hope this is the year that you guys with 401ks, I hope this is the year that you go ahead and get with someone and find out about rolling over that 401k or part of that 401k into a precious metals IRA. 401ks have been doing extremely well, but again, they are attached to markets. So please do contact someone and ask them about a self-directed IRA or 401k, for your 401k, a precious metals IRA. Talk to someone and see what you can do to take some of those chips off the table and put them in a precious metals IRA. When guys like James Rickards and whoever else are talking about you should allocate 10% of your portfolio to precious metals, that's also you. That's also us. People with 401ks, if you can, 10%, or talk to someone. Again, it's not financial advice, but it's something I hope you look into, and then decide for yourself if it's something that works for you or not. Um, Polynesian Pip 2020 will be followed by 2021. You know, yes, it's not going to be whatever happens. It's not going to be the end of the world. 2021 will roll around. So that's a good way to look at things. Let's see. You can't just be in paper, or you'd have to agree. Let's see. Map of Tat. I have my lion's share of metals. Yeah, you're going to do very well. I think you're absolutely going to do good. Norman, Liu, Happy New Year. Happy New Year to you too, man. Appreciate it. Let's see. Water, AG is going into short supply. It. You can't discredit that. I mean, Yes. Short answer, yes. It can absolutely happen. That's a good point. Okay, so getting back into more of these 2020 predictions, it the millennials, what are the millennials going to do as 2020 moves on, as the decade moves on? And I'm not coming from the viewpoint of, what are they going to do, meaning do they know what to do? I'm coming from it from the viewpoint of these are the guys that are going to set the laws one day for us. These are the guys that are going to take leadership positions, and we're going to have to follow their leadership. So for millennials, this decade, it's going to be an amazing decade, and I hope for positive ways. But here's one millennial who was talking to Ray Dalio, and she had some very good questions for him, and Ray had some really good responses. So I hope you can take this one in.
If in the next downturn, some of the implications could be the impact on pension obligations, health care. Is my generation going to be on the hook for that?
Yeah. So we pay a lot of attention to debt, and we should, but pension obligations and health care obligations are just like debt. They're obligations that require cash to fund those things. And when you think about that, we don't have enough money to fund those things. And so there'll be a squeeze. And I think that's also part of this political conflict, because when you say to somebody that you're not going to be able to fully fund their pension, or how are you going to fund it, what are you going to take it away from in order to fund it? Or if you think about the health care issues and so on with the demographics, and those require taking things away from people that have been promised to people, or do you print the money? These are issues that will be important for your generation.
Okay, so Ray is just pretty much telling this young woman straight up. Yes, millennials, you are on the hook for pensions. You're going to have to take care of a lot of the things that politicians kicked the can down the road on, kept kicking it, and they may not be able to kick it too much further. And unfortunately, it looks like it's going to end up in your lap, where millennials are indeed going to have to take care of a lot of these issues that are happening now, and it's because of a lot of the things that politicians have done decades ago. So we're all going to see it. We'll see it come to head for sure. Taking a look at some of the comments again. Gary Cates, yes, it's starting to wear very thin. A house divided cannot stand. That is true, man. We need to we got to find a way to come together. And at least for this channel, I know one way that a lot of us come together is because we do understand where things are right now and where they may be going to, and we do understand again what things like gold and silver can do for us and how they can protect us. So I think that's probably the common denominator for almost all of us here, and I'm happy that we all are awake to that. Let's see. Min Jin Sao, how you doing? Long time no see. Even in a country where it is homogenous in a makeup, Taiwan, you can still play the card of being from different lineage within the same country. Okay, I wasn't following that one, so I'll have to let that one slide. Um, okay, let's see. Rob Steiner. Okay, yeah, you guys are getting into some pretty sensitive topics there. Um, I'll let those go. But yeah, feel free to state your opinion. So that's what Ray Dalio had to say to this millennial. That's his prediction of sorts, or a fact of sorts, for 2020 and beyond for millennials. And he had one more thing to tell this young woman, and I found it pretty interesting, and I think you guys are going to find this interesting as well, because it impacts a lot of us.
And when you're talking about the next downturn, you're also bringing up some big social issues, the wealth gap. How do you think about that? How do we address this issue? Because it sounds like it's going to be a very big problem.
Yeah, I think capitalism has got to work for all the people, and democracy's got to work for everybody. And we're in a situation right now because of a lot of things that it's not working for a large portion of the bottom 60%. I separated the averages to the bottom 60% and the top 40%. I could have done it the 80% or even 95%. And it's not working for a large percentage of the population. We don't have adequate education. We don't create bottoms. In many cases, my wife works in Connecticut to try to help what are called disengaged and disconnected youth. Let's give you a picture. Connecticut, which is the richest state in the country, or equal to the richest state in the country, has 22% of its high school students are disengaged or disconnected. Disengaged means they attend high school, but they don't really study, they just sort of get through. And disconnected means they don't even know where they are. 22%. Those students, those people are going to be on the street. That's a problem. There are school districts in which they have to share books, or in some cases, even have to share pencils. They literally will break a pencil in half and sharpen it from both ends, or pass it around and so on. And that issue about opportunity in terms of education or even income opportunity. There's a population that in that bottom 60% where opiate use is rising and suicides are rising. That, I think there has to be considered a national emergency in which we create metrics. What are those conditions? And that there should be a dealing with that. I think that these things can be dealt with much, much better. But it has to be treated in a way that that's dealt with. And that has by making them productive. I don't mean by giving money or by giving welfare, but by doing certain things, probably in private-public partnerships, in which the private sector, that could be business sector, together with the government sector, can do the checks and balances to make those things productive. I see many of these cases. I fund, for example, microfinance. Grameen America is one, but a number of those. And the capacity to lend somebody $1,000 and get paid back, not 99%, 98% payback rates. And that $1,000 can create the purchase of a rug cleaning piece of equipment, and that person's in business to be able to be productive. Those kinds of things need to be thought about, because if we don't have capitalism working for the majority of people, it's going to be threatened. And the same thing is democracy.
Okay, yeah, those last words that Mr. Dolly had to say. If capitalism and democracy is not working for all the people or most of the people, it's going to be threatened. Capitalism will be threatened. Democracy will be threatened. So I just found that um, concerning. I know I always use that word, but what he had to say, especially towards millennials, when you look at how a lot of them feel they're not getting a fair shake. A lot of them are in debt. A lot of them, they are having a bit of a rough time, and if they feel like they're not getting capitalism is not working for them, democracy is not working for them, you are going to see changes where these younger people are going to um, more or less lead the country into whatever is going to work for them. So I think we are coming to some sort of a fork in the road with this generation, and we'll see how it goes. A lot of us are getting up in age, and the values are different. Their values are different from our values. So we'll have to see. Rolf Steiner, the pitchforks are coming. Yeah, yeah, it could very well be on the way. RR, I trust all these clowns as far as I could throw them, and even if I could toss them to the moon, I still don't trust them. Rob Bromley, how you doing, sir? Silver up close to 3%. Yeah, silver's been doing very well. We took a look at it earlier. In fact, maybe I should take a look at it again now. Let's see. Let me refresh this page. So again, this is our website. Let's see. Okay, yeah. So silver's at about 1848. Gold is 1578. So both doing okay. Check on that ratio one more time. We're still at about 85, getting closer to 86. So yeah, it's definitely interesting times as we see what's starting to unfold. So, again, for millennials, it does seem to be like times are a little bit tough for them. I know some of us can, we have different views on it, and that's fine as well. Um, but getting back to what we started with on this outlook for 2020, where this one person, she said, uh, we're doing better this decade than we are compared to last decade. And then this gentleman mentioned the booms and the bust, and it reminded me of something that Jerome Powell said.
Economists like to say expansions don't die of old age, meaning there's no time limit for how long a period of growth can happen. But there are still warning signals that could be pointing to the next recession. Record low interest rates have fueled record high debt levels. Some economists and investors fear U.S. public debt, which totals more than $23 trillion, is the next ticking time bomb. That debt is only set to go up in the next decades as America's population gets older. And if interest rates go up, it will be even harder for the government to pay off.
A lot of discussions whether the expansion can continue or not is all about, are we vulnerable in the expansion because of student debt being so high? Are we vulnerable in the expansion because of corporate debt being so high?
Political and trade uncertainty are also creating unease about the future health of the economy as the U.S. enters a new decade.
The trade war, that could really screw things up. Businesses are very nervous, particularly larger businesses with multinational operations.
Others look to technical indicators like the yield curve, which has been flashing recession signals.
We know there will be a next recession. We just don't know when it'll be. We don't know whether it'll be 6 months from now, a year from now, or 3 years from now. We haven't seen the last economic recession in U.S. history.
But maybe, as the chairman of the Fed has said, there can't be a bust when there hasn't been a boom in the first place.
What we've seen is 3 of the 4 longest business cycles in U.S. recorded history have been quite recent. So we're seeing that, and if you look at today's economy, there's nothing that's really booming that would want to bust. In other words, it's a pretty sustainable picture.
Okay, sorry about that. Yeah, so something needs to be in a boom before it can bust. There can't be a bust without a boom. Um, I it's almost as if the man is clueless right now. I mean, I know that's not a nice thing to say, but you know, he the Fed essentially is creating all of these asset bubbles, all of these everything bubbles. It's Fed induced, and to say that you can't have a bust without a boom or something along those lines, you know, it's just being disingenuous already. I mean, they know what they're doing. They absolutely know what they're doing. They know a lot of this economy is it's basically zombie already at this point. Zombie economy. It's all weekend at Bernie stuff, propping up things, trying to make like things are alive and whatnot, and then to more or less along those lines of saying, there can't be a bust without a boom. I mean, come on, I mean, you're not fooling anyone. We all know what the Fed is doing already at this point. Um, some of the comments, News Junkie 3000, Fed has zero credibility. Absolutely. For me anyway, none. I it seems every time, especially with Jerome Powell, what he comes out and says, he's going to make a U-turn, a pivot, he's going to zigzag, whatever it is. You just can't take anything that man says at face value anymore. And it's I don't know. It's pretty disturbing. I know for me anyway, I get pretty upset with things that he says, and then only to see him change his mind or not even that. It just seems more like he was going to feed everyone just 1/10 of a truth and 9/10 of a you know of a so truth, whatever it is. So he's got to get his act together. The whole Fed needs to get their act together. Um, okay, some more. Mrs. Crackup, yeah, could be. Uh, let's see. Patty, hello. We are rocking and rolling tonight. There's no question that there will be a downturn like we have never seen before. What comes next, we have never seen before either. That's the thing. I don't think any of us were around in the Great Depression, and we we haven't seen anything like it, you know. And this time around, it's probably even going to deal with our currency. So I mean, getting your currency, you know, devalued or inflated is one thing, but having a currency that's, you know, not even wanted and not even useful, that and has to be thrown away, and probably a new one made, or a new monetary system made, where a different country or entity might take over. I don't think any of us have been through that. So we are heading into something pretty huge. You know, I mean, I wish it could be a bit more positive. 2020 is just starting, and I'm already the, you know, forecasting gloom and doom. Sorry about that, guys. Um, Ride the curve. Its credibility is at negative rates. Yeah, I wish they could be a bit more straight up. You know, unfortunately, it's a crooked Fed right now. You know, they're just not being straight up. Daryl, Creature from Jekyll Island. Yeah, that's true history. That's a good book. What's coming cannot be stopped. Polynesian Pip. Yeah, that's the thing. You know, I don't think we can stop it. You know, it's just basically pretty much going to be thrown upon all of us, and again and again and again. We may not be able to do anything, and this is why we need to get into things like gold and silver, these store of values, because that may be one of the few things we actually can do, is be able to position ourselves when we transition over from the current monetary system to the new monetary system. That transition between the two, that's the key. A lot of people talk about that aftermath, but you got to get through that transition before you get to that aftermath. So transition is key. My opinion, you want to make sure you have these stores of value. You want to make sure that as the fiat goes or falls, whatever it is, your value is now in something else that will hold the value. And historically, traditionally, it's always been gold and silver. We just showed you earlier in the program where banks have 1/5, 20%. They've been buying up gold, so the banks are doing it. This is something you can do as well, and I hope you guys are doing it. We are in uncharted waters, Amy Fuller. Absolutely, we are in uncharted waters, but at least we're in this boat together. We're all in this boat together, and if we do the correct things, we'll all get through it, and we'll all be okay, or as best as we can be. So it's not always entirely a negative thing. Let's see. The whole reason Powell is there is to be the scapegoat. He and Trump will be blamed. Yeah, someone's going to get blamed, and unfortunately, the ones that should have been blamed, they're long gone. This was 5, 10, 15, 20 plus years ago, even more. These guys are long gone. Kick the can down the road, and we're going to see millennials have to deal with it, and they may make some drastic changes where maybe socialism might be a better thing for them than capitalism. And for me, that's the spooky part. But again, they are going to decide the fate of the country, and you know we have to help them understand things like having gold to back the currency, and things like that. Sound money. We need millennials to understand these things, and which reminds me, coming up this week, we're going to have JP Cortez from the Sound Money Defense League. So he'll be up. He's on deck, and he's nice young guy. Nice young guy. Good to see some young blood in the game. He's one of these guys that we need more of, and I hope you guys will be able to watch the interview coming up later on in the week. Um, let's see, any more? Greenspan is long. Yeah, Greenspan hopefully lives long enough to see the crop his seeds have sown. Yeah, I tell you what, there's going to be a lot of angry people, a lot of hurt people, and unfortunately, a lot of people, they, if they didn't follow the history of what was going on with the Fed and all of these things, all they know is what's happening today in this short window, and they will not understand that it goes way back. And it's not necessarily the people you see today. This is something that went way, way, way back. So those were what some of the guys in the markets are saying. But how about precious metals? That's what we want to know, right? 2020 precious metals outlook. Took a while to get here, but we're here. So let's start off with this interview.
Let's bring in Suki Cooper, Executive Director of Precious Metals Research at Standard Chartered Bank. Suki, so great to have you here in studio to kind of take us through the precious metal trade in 2020. We've been talking so much about all these other asset classes. So does gold have room to run in 2020?
We believe it does. We think it'll be a slow start to 2020, and I think it's really the second half of the year where we'll see gold price action really moving to the upside. We think a number of those macro factors that supported gold earlier this year will come back into play in the second half of the year, where we expect US Treasuries to start to weaken, and we expect the dollar to weaken as well.
So the investment thesis or trading thesis behind things like gold, silver, platinum, that sort of thing has always been it's a safety trade, right? Things get rough and tumble. Maybe the global economy starts tanking a bit and people say, I want to be in precious metals. That drives the price up. At the same time, it's used as an inflation hedge if prices are rising too fast and global growth starts to pick up. So which is going to be the preponderance of evidence supports which case for gold prices in 2020?
If we think about the factors that really boosted gold in 2019, it was when we saw trade tensions escalating on a global basis. So late May is when we started seeing central banks around the world becoming dovish, surprisingly so. So next year, we think it's not necessarily going to be just a call on Fed rates, or not necessarily just a physical market, but we think that safe haven play is still going to be very important for gold. And those underlying tensions are still likely to boost investor interest.
So that investor interest because of the safety aspect is going to be big.
Okay, so again, what these guys are looking at is more of the investor side. They're not necessarily looking at what we know as the insurance side. And you're always going to get that difference between the investor who's been riding the markets, who's in it to make money, move in and out here, there, make money. He's always going to have, or she's always going to have a different opinion from a guy who's in it longer term, one who's looking at the history of things and seeing how this can't last forever and seeing the store value aspect. So for investors, I just wanted to throw that in, let people have that half of it where this is what she sees on the investor side of it. But she did have some other things to say as well.
Is gold the best precious metal to be involved in terms of investor returns in 2020?
We think across the complex, the metal with the strongest fundamentals is still palladium. It's a market that was undersupplied not just last year, but the year before. And we think it's going to remain undersupplied in 2020 and 2021. Even though we've seen a slowing in car sales on a global basis, we continue to see higher PGM loadings overall supporting palladium demand.
All right, so let's talk about physical versus futures versus ETFs. When you talk about questions that your clients have, is it geared around, hey, should I buy the bullion? Should I buy the coinage? Should I buy the physical? Or are people more comfortable these days just being in an exchange-traded fund or using gold futures?
I think for a lot of investors, it's a case of where the fundamentals story supports that investment. So it's not necessarily the way somebody wants to have exposure to metal, but which metal they want to have exposure to and whether they want to play a relative trade as well. So we continue to see good interest across the precious metals complex in terms of tactical positioning and ETF holdings as well. In fact, we've seen gold ETF holdings hit all-time highs earlier this year, whereas palladium ETF holdings have continued to fall as investors have taken other forms of exposure.
So there could be a reason to perhaps play a little bit of that supply-demand imbalance in ETFs these days.
Right. And we've seen that in platinum as well. And platinum ETF inflows have been so strong in 2019. In fact, we've seen investors positioning for the long term in platinum, perhaps on the substitution potential for platinum. And also, given that we've seen supply risks in South Africa, support platinum interest longer term as well.
Yeah, okay. So mostly she's talking about ETFs, perhaps some physical also. But moving on, gold up, dollar down. This came out of Forbes, who has an early glimpse of a 2020 trend. So let's see what this article has to say from Forbes. Gold up or dollar down? That's a question which will be asked often in 2020 as the value of the dollar slips against other major currencies, boosting gold because that's how the yellow metal is widely traded. Whatever the correct answer to the gold up, dollar down question, the effect on the share prices of gold mining companies over the past months has been electric. Newmont Gold Corp, the world's biggest gold producer, has seen its share rise by over 11% over the past month, from 38.40 to 42.71. Barrick Gold, another mining company, the world's second biggest gold producer, is up 9.2% from 1680 to 1837 over the past month. Those share price moves easily outperform the underlying gold price, which is up 3.5% over the past month from 1460 an ounce to 1511 an ounce. And as you guys know, we've had a few people like Rick Rule and so forth who have come on our program and talked to us about the mining sector. Um, Back to the article. One reason for the gold miners beating the gold price is that every extra dollar on the price goes directly to the bottom line profit of the producers. But another more interesting reason is that the behavior of the US investor is starting to mimic that of investors in other countries where changing currency values has significantly enhanced the appeal of gold as an asset class removed from government interference as well as being a currency in its own right. The trade wars, the jitters also boost gold, and interest in gold as a safe haven from financial markets churned by uncertainties associated with the trade war and other destabilizing factors such as Brexit and can be clearly seen in the price of the metal since the middle of last year. From a low of 1180 in mid-August 2018, gold rose 30% to a 6-year high of 1537 per ounce in last September before easing back to around 1450 later on in 2019. Confidence that the trade war is entering its end phase might reasonably have been expected to depress the gold price as a form of international normality developed, but that might not prevent an acceleration of interest in gold as the value of the dollar trends down. Investor interest in gold as a currency hedge can be measured in a number of ways, most obvious through the flow of capital into exchange traded funds. Here's our ETFs again, led by the SPDR Gold Trust, which saw inflows of 6.5 billion in the 9 months to the end of September. Total ETF holdings. Let's see if there's other things here. Okay, so they're mostly talking about ETFs and mining, and then we're talking about gold versus some other currencies in the world where we have seen some other currencies reach all time, or gold reach some all time highs in other currencies. Let's see if there's anything else in here. Leading banks continue to recommend gold as a portfolio diversifier and currency hedge, especially if the effects of the trade war linger and interest rates remain low. Gold is an investment necessity, not an option. I think I'll repeat that because it's very true. Gold is an investment necessity, not an option. Lombard Odier, a Swiss bank, made the case for gold in its latest investment advisory note, which focused on the potential for negative yields to persist in European and Swiss government bonds. This has profound implications for long term portfolio construction. Expect government bond returns in the event of a stress scenario are capped, making gold a necessity rather than an optional allocation. Completely agree with that. Completely agree with that. Again, this is how most of us understand gold and silver to be. Um, Again, a lot of people they only see the price and they somehow miss the other aspects of holding or having gold and silver. It's no longer an option. You definitely should be having some. It's just not an option anymore, especially in the times we're in now. Let's see some of the comments again. Trade war is just one episode in the larger arc, which is the rivalry between the U.S. and China. It will not end anytime soon. PM Ruckus. Yeah, I definitely have to agree with that. We're only in the beginning. This is something that it's going to go on, and ultimately, I think it is going to funnel down everything in the world. I think ultimately it's going to funnel down to between U.S. and China. I think things will funnel down in that direction. Um, I hope it doesn't. I hope we can, always stick together on things. But right now you have two countries, two largest economies, two very strong countries. Um, you know, it no one likes to be number two, and even if you cohabitate, somebody's going to want to be number one, and it's I think it's something we need to we can't just push aside and forget about. You have two very strong countries. You have two large economies, and each country needs to do what's best for them. And this is where what's good for them might not be good for the other guy. What's good for the other guy might not be good for them. So it's I do think it's probably unavoidable that we will um, have to really really keep cool and come to terms with things, or come to the table and like I say, just keep cool. I mean, it can work. I think it can work if we all just keep cool about it. And in the end, we all have the same needs. We just want our families to be okay. We want to be okay. We want to have a decent life. And I think as long as these things can stay in perspective, and not one country or two countries trying to dominate the world, then I think we'd be okay. But you know none of us are in charge, right? So it's important. We need to understand these things. It's just you know like I say, there are different needs. The two countries have different needs. That's what it comes down to. Let's see. I lost 85% in Nasdaq. Um, can make it up in GLD US. For me, I don't touch paper markets. It's not the thing for me. Um, let's see. Joseph Allman, sorry about that, guys. Do you have any idea that a government in collapse resorts to despotism and genocide? Have you studied genocide? Do you know about Pol Pot? Um, you know, it can happen anywhere. When a government is desperate, a government is desperate. That's just what it comes down to, and you don't know what they're going to do. And again, this is why, you know, it is good to have, or it is good to hold your gold and silver with you. But for what you just mentioned, it's also a very good reason to make sure you also have some out of the reach of your government. You need to protect that, because that's what you're going to use to protect you. So you need to make sure that's protected as well. And in some cases, you may not want to keep the majority of it with you. You may want to keep enough to get by, and the rest keep it in a safe place. And sometimes that even means a different country. So it's not an easy thought sometimes to think about, but it 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 is a very logical thing to do. If you really want to protect what you have, sometimes you need to diversify the locations of it as well. And then with gold price, we also have James Rickards, who sent out a tweet, and what he had to say is, let's see, the third great gold bull market, which began December 16th, 2015, with gold at 1050 per ounce, is alive and well. Prior bulls were 71 through 80 and 99 through 2011. Gold is up 50% in the new bull market based on priors. Gold should hit 14,000 per ounce in 2025. Plenty of room to run from here. Now, that's a tweet I like. 14,000 per ounce in 2025. It's not that far away. It's just 5 years. So, to get to that 14,000, you can expect a lot of things happening in the world for it to push up that much from where we are today. And again, it's always a good idea to diversify your assets into different things, specifically gold and silver. Again, not financial advice, professional or otherwise. It's just my opinion that I hope you guys take a look into. Okay, so what about silver? Let's take a look at what mainstream media is saying about silver.
It's time now for Charting Futures, and here's Abigail Doolittle. And Abigail, stocks are down, but there's a twinkle in precious metals today.
I like the way you're putting that, Romaine. There certainly is a twinkle for precious metals today, with that Bloomberg Dollar Index down We have both gold and silver higher. That's the story of the year, too. Let's hone in particular on silver futures. Here we have them up 15.7% on the year, more recently being helped out again by that weakening dollar. It's also being helped out by money managers really liking silver. If we take a look at this chart in the Bloomberg terminal, it's a longer term chart, and what we're looking at here is the silver managed money index, and below the yellow line tells you that managers are short, above a net long. So we see that basically coming out of the financial crisis with all the Fed's accommodation, QE, various rounds of QE, silver was viewed in a bullish manner by money managers, especially back in 2016. But in 2018 and 2019, the shorts took over. However, this year, once again, more of a bullish view there by money managers. And I think that will include the chief investment strategist of Quad Group, Peter Borsch. Thank you for taking the time to join us.
Thank you.
And you like silver right now, and that seems to be the view of money managers out there.
So we like silver, we like the commodity complex. You know, when you think about it, you think about in the 2000s, that was sort of the decade of bonds. This last decade, the decade of equities. Could this next decade be the decade of commodities? Stocks, interestingly, bottomed in '09. You know, silver, if you look at that chart, bottomed earlier in the year. You know, was 1989 the right time to be buying Japanese equities? Was 1999 the right time to be buying technology stocks? So you want to think what has been out of favor. You're seeing that shift from negative sentiment to positive sentiment, and that can carry for a bit of a way, whether you want to play it in options or whether you just want to play the breakout in silver as it gets above 1840.50.
Well, if the next decade could turn out to be the decade of commodities, poor man's gold would be one way to do it for sure, especially with silver going back above that 200-day moving average recently.
Well, it's just on the 200 moving day. You wouldn't really consider it a significant breakout yet. But yes, so the initial momentum is there. And one thing that we've said, and I say repeatedly on here, right, range expansion equals price expansion. Our ranges are breaking out to the upside. Likely prices will continue to break out to the upside as well.
Okay, and so it sounds like you think that silver is going to go right above that $17 per ounce. Where to if it does?
Well, I think if you look back and you look at a chart of the current futures contract, you'll see that it can go up to 1850, and then the highest level is 20. And then from there, you have to remember, it came from 50, 49 and a half.
Yeah, that was extraordinary.
Right, that level, then came all the way back down. So even if we do a normal retracement, if you don't think it's a bull market and going to make new highs, you still have a long way to go to the upside.
Well, that area of congestion there certainly looks like a bullish flag of some sort. If back above 17, you would probably see
so
it
you look
confirmed
and a triangle as well.
Yeah, and that, I mean, you could really make the case for 22. So you were mentioning options on silver futures. Let's take a look at some of, you basically are saying that you would want to buy calls.
Well, volatility is low, and that, which is unusual in the commodity complex, but volatility has been low across.
Why is it low here then? Or you're saying it's across the commodity complex
It's
as well?
been because you haven't had net ranges, you haven't had major moves yet. So you, by buying a call, you're not paying an inherent amount for the premium relative to where you would after a market moves. Right after the market moves, you either want to move to futures themselves because you don't want to pay all that implied volatility. Right now, there's not a tremendous amount of implied volatility. Good trade.
Okay, so here we go. This guy likes silver, and therefore we like him. No, just kidding. So he has a pretty good outlook on silver, gotta say. He has a lot of positive things to say on silver, though. He did seem a bit conservative. I think this was just not that long ago that they had this interview. So I think he's being very, very conservative. And of course, this was before what was going on in the Middle East. So, you know, again, you can see how quickly metals can move. Okay, some of your comments. Let's see. Blackjack reward. Which is more difficult, emigrating to Australia or Singapore if you have an IQ? You know, I think in Singapore it's I'm not gonna say it's hard, but it's not easy either. There's a lot of competition for a lot of areas, and especially like let's say with jobs. When it comes to jobs, there's a quota where so many locals have to be employed before you can hire a foreigner. So there's a lot of different things that go on with it. Um, I'm not going to say it's hard. I'm not going to say it's easy. I think it just depends on each person, what they're willing to do, and what they're willing to go through. But wherever you decide to go, I think the key is assimilate. Wherever you go, blend in. Do your best to become part of the country that you go to, and if you can do that 9 out of 10 times, I think you're going to be okay. But that's a good question. Definitely a good question. Dan Reynolds, Bloomberg's report cracks me up. All the talk about silver, paper, and hedge trading that is physical should not be attached. Dan, exactly. You can't let the paper market control the physical market, but for some reason with gold and silver, ETFs they do, and you know there will come a time where the two will disconnect. And I remember maybe about 4 or 5 years ago or so where we saw silver price really go down. I think it even went down below $14 an ounce. And what was happening was people were trying to buy silver, trying to buy gold, because they were looking at that low spot price. But the fact is, there was a shortage in the market where you couldn't necessarily get that gold or silver from a dealer standpoint. And even though the spot price was like at about 1380 or whatever it was, the selling price the selling price was much higher, and that was because the demand was different. So we had the actual physical silver separate from the paper, because paper supply unlimited, right? You can you can always have that paper supply, but the physical supply, that's a different story now. And so we saw that happen, and I'd expect it to happen again. The physical price is definitely going to separate from the paper price. It's happened before. Let's see. Um, but as many tea light candles as buy as many tea light candles as you can. Okay. Let's see. Roger Code 3, expensive lesson for me swapping. What's Okay. All right. So anyway, there's another guy I've just started to follow. He's from capital.com, and he makes sense, and he also has his silver price predictions as well.
So it came into the year trading around about $15.45 an ounce. That was the price of silver at the time of recording. That means it's up around about 10% for the year to date. And of course, with that massive move in the summer, and it's been tailing off since then. During the summer, the domination, I think that the dominating financial chatter was about the threats of trade wars, possible recession in the US, global economic slowdown, all of that sort of stuff. So we did see traditional safe havens, gold is the obvious one, and silver as well, really get enthusiasm amongst investors, and we saw those prices really pushed up. So going into 2020, what are the things to watch out for? Well, I think we still have the threat of trade wars and the maybe the bigger problem of a global economic slowdown. So traditionally, that would tend to favor safe haven destinations. But of course, it's a bit of a double-edged sword for silver, because if we see a slowdown in the economy, there could well be a drop in industrial demand for silver. So it doesn't necessarily mean we're going to see the price moving a lot higher. If we did see, I think, some nerves come back into stock markets, if we saw investors' risk appetite change, that I think that would benefit, of course, that the price of silver when they're looking for a safer destination. I have to say, at the time of recording, stock markets still pushing out to fresh all-time highs. So investor sentiment is still very positive. And probably the US dollar, I think, could well be the bigger factor here. The dollar has had a good run for 2 years. It's up again this year, but there are signs in recent months of some weakness coming back into the US dollar if we looked at it as a basket against other currencies. So perhaps if we saw further pressure on the US dollar into 2020, that's something that should traditionally help lift the price of silver. When it comes to forecasts, many analysts out there are pretty bullish for the year. We've got banks such as ABN AMRO and Standard Chartered forecasting $18 by silver by the end of 2020. That might be something of a conservative forecast for some of the silver bulls out there, but we'll have a look at the charts in a minute and see just how far this could go if it manages to shake off the correction. Let's talk about some of the levels to watch. We've got various resistance levels left from that high in the summer above $19.50. So various peaks left on the way down. We'll look at those in a second. But I think where it's more interesting is on the downside. We have seen the price drift for 3 months now. The latest, I think, major low to watch is $16.50. I think if silver takes out $16.50 on the downside, the risk is we're going to see a bigger sell.
Yeah, okay. So again, I think we're getting some pretty conservative viewpoints on silver. But then again, to be fair, these things were before what started happening in the Middle East. And okay, so I know there are guys out there that want charts. You want to be able to look at some charts and be able to make an analysis using charts. And so what this guy did, he also went ahead and he gave you the reasons why he was looking at certain numbers, and I think you may find this interested once he starts showing his chart analysis.
Let's jump back on the charts now, put some sort of color into these numbers and set up a trade for 2020.
So let's just remind ourselves of the last few years for silver. So it peaked in June 2016 around about $21. Then we had this downtrend that had been in place, had a go at breaking out in Feb 2019, sold off, but holds above those 2018 lows. And then we had this trend. Let's take a look at this now from May of this year. So this was the trend in silver from late May, and then of course accelerated from July up to those highs just above 1950. And when it came back to it in November, we were looking to see if this held, but clearly it hasn't. It's fallen out of that trend line. But I suppose what we could say, I suppose, still supporting the price, we could take the view, well, it's fallen below the trend line, but we haven't really seen a sharp sell-off since then. So is this a false break in that trend? And I think at the moment, the jury's still out. For me, the big support on silver, we have these old lows back here from the middle of August, around about the 1650 level. And that's also the lowest we've seen the market trade during December. So 1650, pretty critical in the short term. But what we do have going on is this correction from the September highs. Let's pick that up. So this is where we are. That correction is still holding steady. We've seen various rallies by silver over the last couple of months, but it just can't crack it, and it keeps slipping lower. So I think where we're trading now, $17, is almost break or bust time. I think the risk is if we fall away from here and go below 1650, we're going to see a much deeper sell-off, initially targeting those August lows down around about 1590, that sort of level. So it really needs to break through this downtrend line and also break, let's say, these highs at what, $17.30 from early December, to start shaking off this weakness. I think if we can do that, if it can break through 1730, 1750, it does look like this correction is over, this slide from the highs in September, and we can start targeting better recoveries. I'd start looking, if 1750 breaks, be looking for a run up towards 1830, these October highs. After that, if that breaks back up to the September highs around about 1870, and maybe then a run back up to 1950. But for me, it does all really hinge on what happens perhaps over the next few weeks around about this 1730, 1750 area.
Okay, so as he says, it does hinge on what happens during the next few weeks. Again, I think this was earlier January that he did this, or late December, before anyway what happened in the Middle East. So he's looking at that 1830 range, and we've hit it. We're at that 1830. We're in the 1840 range, and so according to him, he sees 1870 and then back into the $19 range and maybe beyond. So he's very, very positive on silver, and I think for both metals, gold and silver, generally we are seeing a lot of positive outlook on both metals. Even palladium, we've been seeing a lot of palladium movement, as was first mentioned in the first interview, or the first clip that we posted. It was a surprise. Palladium is a bit of a sleeper sometimes, and a lot of us, we don't get involved in palladium because we think gold and silver is the historic money, so we stay away from the platinum, the palladium. But there's some gains to be had there as well. I know when I first got into the industry, I was silver only. That's it, nothing else. And then it was over time I realized, you're not breaking a law if you go ahead and diversify between metals. And I think a lot of us we do get caught up in that. We stay loyal to one metal, and then we realize, it's okay. We can go ahead and diversify between a few metals. So let's take a look, Minchin Tao. Let's see 1870 then. I'm hopeful, but I would like to see 1870 reached on a different set of circumstances, meaning I'm hopeful, or I'm hoping that it's not met because of what's going on in the Middle East, because that goes to say when things settle, then it's going to come right back down. So I'm hoping 1870 can be reached on a different set of circumstances. I but I do absolutely think it'll be reached this year, especially with the elections coming up and the uncertainties, and then 2021. I think we're really going to see some movement going on there. But it's an election year in the U.S. I think you can expect a lot of volatility with what's going to go on. Mission Cell, Gold and Silver Club, yeah, okay, we'll do. Um, let's see, Rob P. But what will the correction look like if there is one? Rob, that's hard to say. You you just don't know. It's I wish I had an answer for you. Put it that way. I wish I had a confident answer I could give you. But for me and for a lot of us, again, like I say, well, price is one thing, of course. You have to take into consideration price, but it's not all about the price. It's more it's also the insurance aspect, and where we are today in this world. Are we closer to stability, or are we closer to some kind of a change? I think we're closer to that change, and change usually brings about instability. And so with that in mind, I would definitely be looking at the store value aspect, the insurance aspect that gold and silver have and offer. So price is one part, yes, but if I had to say, are we closer to stability or instability? I think it's instability. Therefore, I'm not so concerned about price. I'm more concerned about accumulating my insurance, and I think most of us here probably are that same way. Um, let's see. Uh, that is the $1 million. Yeah, so $1 million question for sure. Um, let's see. Because it's manipulated, you were okay. Um, Biggs makes a mistake when talking about infinity. I mean, everyone has their opinion. That's for sure. But I think this last clip that I'm gonna play, you guys know him. He's David Morgan, and he sent a very good reminder as far as an outlook for 2020.
The point I'm making is that the only time that the big money, smart money, super wealthy move basically out of bonds or at least into gold is because they fear that something could take place that would disrupt the most, quote unquote, most stable market out there, which is perceived to be the bond market. It could go that way for a while before they hyperinflate, or they go into some type of inflation that's really gets out of control. And if you don't have the metals, that's the time that you want them, and that's the time that you're going to have to pay up a lot, or they'll be unavailable. I think this time they could become unavailable rather quickly.
Yeah, I think David Morgan made some point there. Again, these clips are not mine. I got them from various places, Bloomberg, Forbes, various places. This one also, I forget where I got it from, but I'll put that up in the links just to make sure to give people credit wherever we got the information from. But David Morgan does make a good point about it just may not be there next time, and you got to remember, silver is such a small market, very very small market. It would not take much to really make an impact in that market as far as supply or demand goes. So again, it's a good idea to accumulate your insurance as best you can along the way, not overextending, because the last thing you want to do is go ahead and sell back some of your gold and silver because you need to make ends meet here or there. So do what you can when you can, and again, take a look at your 401k. Take a look at that 401k because you know there is money there. More than likely, you have money there that you can use for yourself, or that you can use to protect yourself. So talk to someone about it, about rolling over that 401k into a type of precious metals IRA, or some type of self-directed IRA, because you don't want to keep it in the market. Again, from my experience, um, I lost a few. I mean, I'll just say it. I lost a few tens of thousands in my 401k when 9/11 happened, and again, not to make light of what happened, but just to say that your 401k can definitely take a hit, and with a lot of us getting older, especially if we are a bit older, you may not have time to recover. So do look into rolling over some of that 401k into a precious metals IRA. So I'll take a look at a few more comments before we head out. Um, Map of Tassie. Yes, I agree. Silver bullion are running on empty because everyone has bought it and they can't get inventory in a day. It's getting rarer. Yeah, I mean, you got to remember I mean, I've heard people say that there's above ground anyway. Above ground, there's 5 times less silver than gold. Um, Above ground. So then the question becomes, well, if you got to go and get it underground, then how much is it going to cost to get it underground? And usually those underground guys are the secondary miners. They're getting it as byproducts from nickel, copper, whatever else it is, zinc. So we may not exactly know what the price of silver may be, but we do know that the supply probably will become a bit tight. And so again, it's another good reason to go ahead and get yourself some silver, get yourself some gold. Um, let's see, yellow blood silver fox. What city state are you in, my brother? Originally, well, if that question was meant for me, originally I'm from Hawaii, but I'm in Singapore right now. I've been in Singapore since 2005. Let's see, Giuseppe, 10-year government bonds have fallen below 50-day. Okay, before 50-day moving. Okay, got to take a look at that. Let's see. Joseph Almond, physical health is priceless. Absolutely. You got to take care of that health too. Um, Again, I apologize. I'm battling a bit of a cold here, so I may not seem, so lively, or my voice may seem a bit awkward, which might be normal in fact. But anyway, take care of your health for sure. Um, let's see. Maybe at 500 an ounce, you can have mine. $500. Okay. Uh, Normally Leo, yes, but he will get guard out on show. Okay, you guys having a good conversation among yourself. I'm trying to keep up with it, but well, that's good. That's part of it, you know. Um, okay, which city is hotter, Hawaii or Singapore? You know what? I'm gonna say temperature wise about the same, but the difference is there's always wind in Hawaii, so you always have that wind to cool things down, so you don't notice it as much. Um, okay, let's see. Get off the drugs. I haven't started. I need to go and get some of those some of the good stuff from the doctor up the road. Maybe something to ease up on the cough and the throat pain. Let's see. Sage's wisdom. What are your feelings about constitutional silver coins? I personally like junk silver. I mean, if you had to go through the scenario where if things kind of fell apart, um, I do believe, it's my opinion now, people will recognize a quarter, a 1964 quarter, or pre 64 and earlier quarter. They will recognize that more than they would a 1 ounce silver eagle. And so for that reason, I would especially hold junk silver because, again, when things really go bad and you need, yeah, some type of money to make a purchase or whatever it is, and if people aren't trusting the fiat, they will recall the quarters, and then it's something that maybe could be explained to them that there's silver in these quarters, in these dimes, or whatever it is. So I do think the first play, especially if you're in the States, is to have some junk silver, and then of course have your 1 ounce bullion coins. And I think even in the rest of the world, if you think about it, the reserve currency, the U.S. dollar reserve currency, junk silver is the only part of that reserve currency that is still backed by silver. So, even there, it has use still. I mean, if you think about it, It's the only part of the reserve currency that is still backed by some type of silver, or I don't know if you, well, let's just leave it at silver. So for that reason, also, I mean, I do like uh, junk silver, and then it would roll over. I would suspect into bullion, but that's just my opinion. Um, our Mad Max scenario, junk silver would be quite useful. Yeah, again, I do think it will be because again, those are the first things people will recognize, and until people really understand, I mean, as you know, that short period of time moves on where people start to understand gold and silver again, they will recognize the junk silver, and then they will recognize the bullion coins and bars and things like that. So it's a good idea to have some junk silver for sure. Let's see. Rob Steiner, they won't take a gold eagle though. That's funny money green paper. Well, I we can trade them. You know, they can have all the green paper and they can give us all of their gold eagles. You know, I think most of us will be fine with that. Let's see. Sage's wisdom, great. We try. You know, we try to put ourselves in a time period. You know, half a year, 1 year, 2 year, 5 years ahead, and you know, again, it's to protect yourself, your family, and like I always say, be a blessing, not a burden, because we all are going to come down to those two things. We're either going to be a blessing or a burden. So do what you can to be that blessing. Roger, does silver bullion storage protect from coming USA confiscation? Mm, okay, the vault, our company, the vault, it's solely Singapore registered, and I do hope I explained this right. Entirely Singapore registered. We don't have any U.S. entities. We don't have any New Zealand entities. We don't have any Australian entities. Whatever it is, we are just Singapore. That's it. Meaning, if a different country were to come in and say, you know, hey, this guy is bankrupt, you know, you need to send us all his holdings, or liquidate all his holdings and send the cash. Thing is, it would need to go through certain channels first, and because basically, I hope I explained this right. We only take direction from Singapore. We don't take direction from the US. We don't take direction from New Zealand. We don't take direction from Australia. All we take is direction from Singapore. And the way Singapore works is, you know, the government does understand that it has to take firm positions. It cannot necessarily take sides on things, but it'll take a firm position. And you know, it's one of those things where trust is everything. You know, when people put things here, they have to trust that it's going to be here, because if that trust is gone, it makes it much more difficult for a country like Singapore to continue on business as usual, because trust is everything. And so again, the best way I can put it is we only take direction from Singapore, and I think I should really leave it at that. I don't want to explain things wrong. We don't take it from the US, we don't take it from any other country. It only matters what Singapore tells us. It's not like, you know, if we were a company that had vaults all throughout the world, and then let's say if a government wants to reach in to the vault in Australia, and if Australia said no, then US would pressure the vault in US, maybe going to sanction that vault or shut it down, whatever it is, unless that vault in Australia gives them what they want. You know, we're not like that, and which is why we are not in different parts of the world. We, again, it's just Singapore. We only deal with what Singapore government tells us. Um, so let's see. Bill Murphy said 1850 was key level and then bounced to 2050, but the real big silver number is 21, which apparently all the banks have shorts against. Um, okay, that I gotta look into. Gotta look into. Rolf Steiner, best passport in the world, Singapore. You know, Rolf, that's what they say. I think it's even come out in a few articles. And again, it's because the government understands. They understand the transparency. They understand that you can't do all these funny things, and they understand trust. They know that the trust has to be there. So you know, it's all important things. Let's see, Singapore's way safer than, you know. I mean, I tell you what. In fairness, Rolf, I mean, I'll answer that one. If I were in the U.S., I would have a hard time understanding the concept of storing someplace else. I probably would not understand it. I probably would not consider it. But after living here since 2005 and understanding the place, seeing the changes that are going on in Europe, the changes that are going on in the US, the changes that are going on, in the rest of the world, and seeing the stability that has been here all these years and looks like it'll continue to be. Yeah, I would have to say now because I'm here, I see the difference. And, again, I don't expect everyone to agree with that. Circumstances are different for everyone, but because I've seen both sides, I can confidently, comfortably say it's safer here. Okay, so let's see. Um, Map of tasks. There are some vaults that won't accommodate sign up U.S. citizens. That's a legal issue. There are some. I don't know the reasons why they would or would not. Well, I should say would not. Only thing I can think of off the top of my head is if they are storing in different parts of the world. Like I say, maybe they store here and maybe they store in Australia, New Zealand. Maybe they store in the U.S. and they have different affiliates. It may be an issue. It could be an issue similar to FATCA. But again, this is why for us anyway, we understood that you need to have a solely Singapore registered company, and you eliminate those other possibilities from coming into play. Um, okay, uh, yeah, only Singapore jurisdiction. Um, we yeah, that comment was from Vincent. Vincent, thanks for for chiming in and helping me out with that one. Didn't want to you know say wanted to make sure that what we're saying is true. That is true. We follow only Singapore jurisdiction, and we don't take instructions from any other government, and that's probably the biggest difference. And we can do that because again, we are only here. And with that, before I say too much or I speak or I say something wrong, which I don't want to do because of this cold here. I'll be ending it, and I do want to thank you guys for chiming in and bearing with me and my voice here. I know it's getting a bit raspy, but thanks for chiming in. 2020 outlook, I think for gold and silver consensus, it's looking pretty darn good. Physical for physical gold and silver. Stick with it, and again, do look into your precious metals IRA if you are holding a 401k, and just be sure to take care of each other. Keep talking to friends. See if you can wake them up a little bit here and there. This is important stuff because, like I said, we're all either going to be a burden or a blessing, and we want to make sure we're that blessing. So you guys take care. I appreciate you being here. Map of Tassi, appreciate you being here. Let's see, American Rebel, thanks. Dan Reynolds, thanks. So you guys take care, and as always, saddle up for what's coming ahead and silver up. And I'll see you guys next week. Take care.